Spanish Economy Minister Luis de Guindos will meet Wolfgang Schäuble in Berlin later today to outline the latest measures Madrid is taking to get its finances in order. De Guindos yesterday told journalists that Spain would absolutely not need a full sovereign bailout. Joining us now is Sara Pérez Frutos, partner and director at Dracon Partners. Sara, does the market agree with the assessment there from Spain's finance minister?
Yeah, but in fact, until at the beginning of the session, the market looks to support Mr. Guindos and appears the green numbers. Now we again are in red numbers, falling down more than 1%, and we really are waiting what happened in this meeting. That we believe that is very important because Mr. Guindos is going to explain to the finance minister in German how will be implemented the Spanish financial system reform. So really we are very expected about the reaction of this meeting.
Is he, Sarah, is he explaining or is he reporting? I mean, effectively, has Spain now lost control of what they could? I mean, you know, the memorandum of understanding for the bank loans was a lot more stringent than we thought it was going to be.
I could agree with you. Really, it's reported because the help that the European Union had given to the Spanish financial system has so many details in terms of interest rate, in terms of term, that really is more a report, and probably the next step of the reforms that more an explanation about how creative could be the Spanish government being fat. Now we are very focused, straight focused on the line of Ms. Merkel and the German government, and really we have a very small part to apart from the lines that Brussels and the European Union give us.
I saw Manuel Barroso said yesterday Spain should take some help. De Guindos denied there was going to be any sovereign bailout. But look, we're looking where yields are at the moment, and we'll see what happens with this 3- and 6-month auction. Surely it's only a matter of time before Spain has to get external financing help.
Probably, because if you look at the 10 years bond is really terrible, 7.5%. Never in the last 20 years Spain must pay so enough for its debts, and we can maintain this level for many days or many weeks. So really we want to need some kind of help. It's not you want to call rescue. You need help from the European Fund, or really the BCE need to buy not only the Spanish debt, to the Italy debt that has in trouble too. But we can stand in this situation for more than 1 week, 2 weeks.
Curious too, Sarah, what effect the short-selling ban is going to have. We're seeing markets down this morning, and it seems like these measures always come in as kind of the closing the barn door before the horse is gone. We also see, just curious what impact you think that's going to have on trading.
Really, the measures that the Spanish authorities have taken is not the solution. If you don't allow the short position, you only are putting like a door to the land. Really, the market now is broken. The Spanish market equity is broken, and we don't need this kind of measure. We need more structural reforms from the government, and really that our partners from the European Union take or recover the truth in our economy and in our government. So really all these measures that we are seeing is not the key point, and it's not the solution.
Sara, we're just getting the Spanish auction results through on those 3- and 6-month T-bills. Just stay with us because I'm just going to read it. They've raised just over the 3 billion that they wanted, 3.5 billion across these. It was 1.60 of the 3-month. They raised 1.6 previous auction. The bid to cover on that 2.9 versus 2.6, 1.42 of the 6-month. bills. It was 1.48 previously. The bid to cover on that, 3 versus 2.8. Crucially, what I don't have yet are what the average yields are. Just to remind you, last time in June, the yields on the 3-month were 2.36%. And last time in June for the 6-month, though, 3.23%. Kelly, you haven't seen the yield come
No,
through,
they haven't come through yet, which is interesting. It's taking a couple of minutes, and you have to wonder what levels we're going to be looking at, given that remarkable yield curve right there, where, Ross, you're seeing the 2-year going for almost more than the 30-year.
Yeah, which is a key point. So you think, Sara, you think we're unsustainable here for what? Basically in another month, you think we'll be in a bailout? Sovereign bailout?
No. It's not sustainable because it's so strange that the short terms must pay more than in the long term. That is almost stupid. So we can sustain this situation more than 1 week, 2 weeks, if we remember the terms that allow to survive Greece, that only 1 week with these levels, or Ireland no more than 10 days, or Portugal almost a month before that they need to ask the rescue. We are in this situation, but we need to wait, because probably in this couple of weeks, the coming couple of weeks, our government approve new reforms, new structural reforms that allow our country to not to ask this terrible rescue for our economy. We are really waiting these structural reforms because the European Union has asked, and these structural reforms are about our region. Our region now belongs the half of our total debt, and this is the key. All the cuts that the government has approved is not enough. We need really to focus on the region that only are cost central, and not make incomes. And we think in our country, like a company, we need to make a cost cut, synergies, and reorganize our state. This is the key.
Yeah, thanks for that, Sara. Sara Pérez Frutos, Partner Director at Desson Partners. We're still waiting for those. The yields are out. I've got to bring you the yields before we get to Julia. The 6-month average bill yield, 3.691%. That's higher, as we might have expected, versus 3.2 last time around. And the 3-month average bill yield, 2.43. Not an enormous jump versus the 2.3 that we had previously. So that's the latest on the yields. They are slightly higher. We might have expected to be more higher than they were, but albeit it is only 3- and 6-month money. Meanwhile, the Troika is back in Athens. Julia, as a result, has gone back there. Jules, they're there. We're gonna have to wait a while before we know what they think.
Absolutely. It looks like